All right, let's get into it. So, I've been digging into this really dense technical analysis report on CT, and man, it is just jam-packed with numbers, acronyms, and some pretty strong opinions. So, my goal here is simple. Let's break it down together and figure out what this report is really trying to tell us. You've got pages and pages of data here, moving averages, volatility, momentum, the whole 9 yards. But what's it all really saying? If you had to boil it all down, what's the one key message this report wants you to take away from all this complexity? Well, believe it or not, this entire super complex analysis, every single data point, it all gets boiled down to this one number, a technical score of 1.0. And yeah, 1 is a really low score. So what does a score of 1 even mean in this context? It means exactly what you see here. The final verdict from this report is about as blunt as it gets, a strong sell. And yeah, we're starting with the conclusion because, honestly, it colors everything else we're about to look at. Okay, so now that we know the ending, let's rewind and see how they got there. We're going to unpack the why behind this pretty aggressive and very decisive bearish rating. What evidence are they actually looking at? And what's really crucial to understand is that the report isn't just flagging a bad day or a bad week. It's pointing to this persistent pattern, this ongoing selling pressure. Basically, it's saying that based on the charts, the easiest path for the stock right now is down. But here's where it gets really interesting, because the data isn't all pointing in the same direction. There's actually a conflict. It's like this battle between the stock's long-term story and what it's been doing just lately. A real tale of two trends. I mean, just look at this gap. It's massive. You've got the 200-day moving average, which is a great way to see the long-term health of a stock, sitting way up at $4.58. And then you have the current reality, the price right now, all the way down at $232. That disconnect is enormous, and it's screaming long-term downtrend. And just so we're all on the same page, that's what a simple moving average, or SMA, is all about. It's designed to smooth out all the daily noise and just show you the big picture trend. And in this case, wow, that big picture for CETY has been pretty negative. Okay, so that long-term picture looks pretty grim, right? But, and this is a big but, the story gets a little more complicated. The report also found these little flickers of life, some green shoots in the very short term. Maybe, just maybe, a sign that it's trying to find a bottom. So check this out. The price right now is actually above its 20-day average. That's a short-term positive. And then you see these other signals, like the linear regression slope. It's slightly positive. The angle is just barely pointing up. Now, these are tiny signals. They're subtle. But they do suggest that for right now, that downward freefall has at least hit the pause button. So you see the conflict, right? You've got this huge, powerful, long-term downtrend fighting against a couple of weak, short-term positive signals. So which one wins? Well, let's dig a little deeper into the individual signals that led to that final strong sell score. All right, first up, volatility. The stock's beta score is 2.87, so here's how to think about that. If the overall market has a beta of 1, kind of like a smooth car ride, then CETY is a full-on roller coaster. Yeah, it's almost 3 times more volatile, which means the swings, both up and down, are going to be way more dramatic. And whoa, this chart really hammers home that long-term story we were talking about. Right now, the stock is only worth about 12% of its highest price over the last year. I mean, look at that. That's a nearly 88% drop from its peak. That just reinforces how powerful that bearish trend has been. Okay, let's talk momentum. The RSI, or Relative Strength Index, comes in at 62.27. So the rule of thumb is under 30 is oversold, maybe a bargain, and over 70 is overbought, maybe getting too pricey. So at 62, it's kind of in this weird middle ground. It's not a screaming buy based on being oversold, but it's not showing super strong buying momentum either. It's just there. And, things get even less clear when you look at the volume data. What you really want to see is strong volume confirming whatever the price is doing. But here, the report says its main volume indicators are basically arguing with each other. They're not giving a clear signal. That's a bit of a yellow flag. It suggests there's no real conviction behind the recent price moves. Okay, this next part is maybe one of the most important things to talk about when looking at any analysis. What's missing? And to its credit, this report is pretty upfront about the fact that it has some major blind spots. I mean, just take a look at this list of missing pieces. You're missing things like MACD for momentum, parabolic SAR for trends, and this one's a biggie, support and resistance levels. All of it is just listed as not available. Every single one of those missing items is like a missing piece of the puzzle. It makes it really hard to see the full picture with any confidence. And I really want to double down on this. Not having support and resistance levels is a huge deal. Those levels are like the historical floors and ceilings for a stock. They tell you where it might bounce or where it might get stuck. Without that data, trying to predict where the stock might go, well, it's pretty much just a shot in the dark. Okay, so let's put it all together. We've got this powerful long-term downtrend, a couple of weak short-term glimmers of hope, and a whole bunch of missing data. So, where does that leave us? What does the report say is going to happen next? Well, based on how much the stock has been swinging around lately, the report gives us this very short-term forecast, just for the next day of trading. It's basically saying, hey, expect the price to trade somewhere between 216 on the low end and 248 on the high end. This isn't a crystal ball for the future, it's just a statistical guess about the very next day's range. And that brings us right back to where we started. After looking at everything, the good, the bad, and the stuff that's just not there, the report's final verdict doesn't change. That huge gap we saw earlier between the long-term trend and today's price, that story is just too loud, too powerful. It completely drowns out those few faint positive signals. And that really leaves us with one big question to chew on. See, a technical report is all about the past. It's a snapshot of what the price and volume have already done. It has no idea what news is coming tomorrow. It can't predict a big contract or a bad earnings report. So the real question is, with the charts looking this rough, what kind of fundamental change, what kind of real-world news would be massive enough to completely flip this script and start a news story for the stock? That's the million-dollar question. Thanks for tuning in.